Japanese candlestick patterns originated from a Japanese rice trader called, I am not finna mess this name up, we're gonna call him by his last name, Hama, during the 1700s. Almost 300 years later, it was introduced to the Western world by Steve Nyson, I'm sorry, in his book called Japanese Candlestick Charting Techniques. Now, it's likely the original ideas have been modified, which now results in the candlestick patterns you use today. Anyway, that's the brief history behind Japanese candlestick patterns. Let's learn how to read a candlestick chart. How do you read a Japanese candlestick chart? We're going to read the basically how candles work: open, high, low, close, what it means when the sellers are in control and when the buyers are in control. Candlestick anatomy, understanding the open, close, high, and low of a candle. I tell this to everyone new. You got to watch the charts like you watching your favorite reruns of Martin, whatever you watching. I don't do this anymore because I get it. And that defeats the purpose of understanding time freedom once you actually know what you're doing. We're not supposed to look at these charts all day. But in the beginning, you need to watch these candles form, open, and close, and understand how they work. You should be able to look at a candle and tell what it did before it closed so that you can know what's going on. That's how you really can read the charts and read the markets. So we got a bullish candle. We got the open. Bullish candles are buy candles. They start at the bottom of the candle. So they open, they go up, and then they close. The way that this works, how they create wicks, a candle opens, it goes down. It was a red candle. And when it came back up and got back to the open, this turned into a wick. It pulled all the way up, came up here, and then pulled back. And this was a whole candle that turned into a wick. And then it closed. Since it closed above where it opens, it's a bullish candle. Same for the bearish candle, which are the sell candles. So if this candle happened just like this, and it closed, and then the next candle came, it opens right here. So this candle opened, it pushed up, it was a green candle, came back below to the open, that turned into a wick. And once it got lower than where it opened, it turned into a red candle. Came all the way down. This was a body, pulled up, turned into a wick, and closed right here. And since this closed below where it opens, it stayed a red candle. I'm going to go a little deeper into this. If this candle closed how it closed, then it's opened here. If this candle had a went up and this stayed a body and it never came back down, it would have ended up a green candle just like this. We're going to go over this and I'm going to show everything on the chart, but we're going to run through the main patterns to look for. There's a lot of them, but if you can recognize these patterns, everything else is pretty much just a variation of that same type of pattern. So they don't have to look perfect when you see them on the actual chart. If they look anything similar to the candles, we're going to gravestone doji. So there's a few different types of dojis. We're going to go over the gravestone, which has basically a longer wick at the top. It can have none at the bottom. So a gravestone doji is a one candle candlestick pattern that occurs when the open, low, and close prices are all near the low. So it basically open and close near the same spot. Here's how to recognize it. It forms an inverted T shape. It has a long upper shadow and little or no lower shadow. So it can be a small wick down here, a small body, or none at all, long as there's a long wick at top. It's almost similar to a shooting star. And this is what a gravestone doji means. A gravestone doji represents rejection of higher prices and signals bearish momentum. So it wants to sell. It shows that sellers stepped in to push prices back down after a period of buying pressure. A gravestone doji may signal a potential reversal, especially during an uptrend. Then we got the dragonfly doji, which is the opposite. This will show um, another sign of reversal. So it's a bullish reversal candlestick pattern that appears when the price opens, drops significantly, but closes near the high of the session. So this look a little weird, but it looks like an upside down. Well, I know this is like a regular T. Long lower shadow, little to no upper shadow, opens and closes near the high. So it's still opened and closed pretty much in the same spot. This one could have opened, went up a little, came down, pushed back up, and then still closed a little bit below the open to make it green. Or how the gravestone doji just showed, it could be a red candle. They can all be either color. The key is to recognize what direction it was going before this formed. So if it was going up and then you see this, you could look for a sell and vice versa. If it was selling and then you see any of these types of dojis is always indecision. They're usually a clear sign of reversal. Then we got a regular doji. These are the ones that appear in the middle of morning stars and evening stars. And I also want to point out with these dragonfly and the gravestone that you can see these in the middle of basically a railroad, and it'll still be considered a morning or evening star. We'll go over all this on the chart. We'll look for all this stuff. So a doji is a one candle candlestick pattern that occurs when the opening and closing prices are at or near the same level, resulting in a small cross. It typically has tall upper and lower shadows, so the wicks. They can be the same length, they can be different lengths, as long as it looks like a cross. A doji represents indecision in the market and shows that neither the buyers nor the sellers are in control. So it can go either direction, it depends which way the market was going before you saw this form. If it was going down and then you saw this, you could look for a potential buy. And if it was going up, then you saw a doji, we can look for a sell. A doji may signal a potential reversal or continuation depending on the context. So remember, these things aren't 100%. And I have seen that sometimes where it was buying and then you see this and then it buys again. That can even happen if it hits one of your moving averages. And let's say if it was the blueberry and it's like, oh, it should sell. And this is that one time it don't. It could have got above the blueberry and then did this or something like that, and then continued its way up. We got railroad tracks, which is one of my favorites. This can happen in either direction. In this situation, this is why I got into the sell on gold today on a 1 hour chart. There's this exact pattern. This can also happen where the red candle's first and then the green candle, and it does a buy. It's bullish. So this can happen either direction. So a railroad track is a two candle pattern with two parallel candles that indicate a potential trend reversal. Here's how to recognize it. Two adjacent and parallel candles of equal size. Their second candle can sometimes be a little bigger. Their sizes can be a little off sometimes, but if you overall recognize two candles pretty much the same size back to back, that's still the same pattern. The candles have a small upper and lower wicks, so it's mainly just big candles, not too much wicks on it. And this is what railroad tracks mean. This pattern indicates a potential reversal of the current trend. It shows buyers and sellers in a fierce battle with neither in control. A reversal is possible when the pattern forms after a significant trend. I want to clarify on the possible. None of these patterns are 100%. They're very accurate. They usually can be 90%. You don't trade them alone by themselves. You trade them along with other confluences and other things that help you get into a trade, which is the whole purpose of everything I'm going over in these next 2 months anyway, is that you need to see at least one of everything we're going to go over, at least three, I'm sorry, of everything we're going to go over. By the time you see three of these things we're going to go over in each video, you'll be able to get into a trade. In short, railroad track signals a potential trend reversal when buyers and sellers are in a standoff. We got evening star, which is my favorites, evening star and morning star. And I'm going to point out, this might sound a little silly, but It's evening star is just a high of the day, the week, the month, whatever on that point in the chart. It has nothing to do with the time frame or what time of the day you're trading. Because this can happen for me in the morning and it could be for you at night, depending on where you're at in the world. So I just had to clarify that. People tend to ask that question. So evening star is a 3 candle bearish reversal candlestick pattern that forms after an uptrend. So we can get the market going up, buying up, buying up. We'll get this candle, and then the next one will be what looks like a cross, is a doji. And then it'll come and completely go the opposite direction. Essentially, what an evening star and a morning star really is a railroad track with a doji in the middle. That's all it really is. So if you can recognize the railroad tracks, your evening stars would be those same candlestick patterns, and all it was a doji in the middle. So it did a candlestick, and then it got indecisives, and then it completely did the opposite. Here's how to recognize it: a large bullish candle up, a small indecisive candle below the middle candle. This is where they didn't know which direction to go, and then a large bearish candle down, closing into the prior candle. Morning star, the opposite of the evening star, is also just a railroad with a doji in the middle. So we got a big red candle, doji in the middle, got indecision, indecisive, didn't know which way to go, turns around and makes a equal candle to the first candle. And these are at your low of the day or your second leg of your W or your V, and it shows the uptrend. After this closes like this, you should get in as soon as this is done and catch the next candles up. You always put these in alignment with your other reasons to get into a trade. A morning star is a 3 candle bullish reversal pattern that forms at the bottom of a downtrend and signals a potential reversal higher. Yeah, and I pretty much said this. First candle is a long red candle. Second candle is indecision. Third candle is a long green candle that closes above 50% of the first candle. They're just going to be about equal lengths. It means the sellers lost control and buyers stepped in. Signals a potential trend reversal from bearish to bullish. Strong confirmation when followed by more green candles. Yeah, so if you get another green candle after this, by that time, you should be in there. And usually with things like this, usually indicators, you'll notice the catch of a muster crossing or something like that after this happens. This will happen first. In short, a morning star tells you the downtrend may be ending and a new uptrend could be starting. Tweezer bottoms, these are bullish buy candles, buy reversal patterns. What this means is we got candlesticks. They did long candles down, they went down, and then went right back up. So the way this would look, we got a candle opening here. It was one big red candle, and then it pulled all the way back up and closed. And then we got this candle that came and opened, and then it went all the way down. And then it pulled all the way back up and then went up even further and closed here. That turned into a green candle. So tweezer bottoms, you'll see this at the low of the day, first leg, second leg of your W's or your V's. A tweezer bottom is a 2 candle bullish reversal candlestick pattern that forms after a downtrend and signals a potential higher high. Here's how to recognize it. Both candles have equal lows, long bottom wicks. Both candles have long lower wicks. So they're long lower wicks and they're equal in length. I'm gonna give out a tip. We probably see this on the chart too. But if you see a candle like this formed, and then you're on the next candle, and then it goes all the way down to this candle, and then it pulls back up before this candle closes, this is when you get real sniper with your stuff. By the time this gets equal with this open of this candle, and it starts to turn into a body again, depending on my other confirmations, I will enter as soon as I notice that. As soon as it gets equal with the previous candle. And then this candle pushes up and closes, even more confirmation. It's always best to wait for these to close and you recognize it. But if I have other confirmations before that, it could be bouncing off the water, mayo, blueberry, your 4-hour trap zone or whatever, the support and resistance, it could have rejected that there and you got all that kind of confirmation. I'll take those entries as soon as I see them. Tweezer tops. We went over the tweezer bottoms. These are the tweezer tops. These show sales at the high of the day. So a tweezer top is a 2-candle reversal candlestick pattern that occurs after an advance in price. Here's how to recognize it. The first candle shows rejection of higher prices. So we got a candle that opened here, went down a little bit, formed a small wick. It don't have to be a wick. It can be flat on the bottom. The point is that it pushed up and it was one big green candle and then rejected pretty much half of the candle or more, however it closes. And there's a long wick. There will usually be a longer wick than a body, if not equal. The key is after that close, we got a candle that pushed up again and then rejected and came back down and then turned into a red candle with a long wick and came to the close of the previous candle. So it's almost like even a railroad with 2 long wicks at the top. And they're basically every time the candles went up, they came right back down and pushed down and formed wicks. See those back to back like that? You can get into your sell. But we got the falling 3 method. So this is a bearish continuation pattern that appears during a downtrend. After a strong bearish candle, price temporarily rebounds with 3 small bullish candles that remain inside the range of the first candle. The final candle breaks below the first candle's low, confirming downtrend continuation. How to recognize it? First candle is a large bearish candle, large sell candle. Next 3 candles move higher. So we get a sell. When this closed, we get 3 candles, 3 vector candles that pull back. Typically, they could be doing something like pulling back to the mustard, and then they get there, and then they sell right back down. All 3 candles stay inside the range of the first. The 4th candle closes below the first candle low. So this comes and just takes out the low of all of these candles. It means that sellers are in control of the trend. Buyers attempt a temporary rebound and bearish momentum continues. So the sell takes over. This is best when used when price is below the water and ketchup crosses mustard after the rebound. This usually happens when, like I was saying, a pullback to the mustard. This can happen on anything. It can pull back to the water. It can pull back to the mayo, the blueberry. It hits it, and then it bounces right off of it. You always need more than one confirmation, but this is part of it. This is the main thing. You should be able to recognize these candlestick patterns on a daily basis. Bullish continuation pattern. This is the buy version of the one I showed earlier with the 3 candles in the middle. We got our 3 vector candles, but the candles on the outside are big candles, whether they're engulfing or just shift momentum candles. So we basically was in an uptrend. We got a big push up. We did a 3 vector that never broke the low of the buy candle. And then this candle came and pushed up and took out all of these candles. After that happens and this candle closes, you can get in for the continuation of the buy. This usually happens if it does something like this broke above the water or the mustard or whatever, pull back to it and then bounce right back off of it. That's what these candles are for. They're continuation candles. We got 3 white soldiers. So these are your 3 vector candles, but there's no bigger candles on the outside of them. So if this was selling and then you saw 3 candles back to back push up, you can get in for that buy. Another thing I want to throw in there is that this can count as 3 levels even, depending on the time frame and just the context, especially if they're real big. You can usually see these 3 candles and then a reversal right up after it. But that we'll have to see on the chart. But they can count as levels as well in some cases. So again, because I don't have it illustrated completely perfect here on this, but what happens is we got an open of a candle, it pushes up and it closed, and the open of this candle would be right here. So it wouldn't be down here, it'd be in alignment with that. They'll basically just close, open, and keep pushing up back to back. And then this is the three black crows. Same thing, just in a reversal pattern. This one I have this lined up a little bit better, but we got sell candles. They closed here, and then this candle opened and pushed, and then this candle opened at the close of the previous candle. They're just back-to-back candles, and you usually will see this after a buy. There'll be a buy, and then these will come in. You can get in to continue to sell. Bearish engulfing, similar to a railroad track, except the second candle is way larger than the first candle. So a bearish engulfing is two candle bearish reversal candlestick patterns that forms after an uptrend and signals to a potential reversal lower. Here's how to recognize it. The first candle is bullish, green, which means a buy with a small body. And the second candle is bearish, which signals a sell, red candle, and engulfs the first candle. And engulfing just means a big candle. It just took out all the rest of the other candles. It's way bigger than the previous candles. So we were going up in the uptrend, and then this came and just took everything out. You can catch that at the high of the day. It actually did this on gold today on the 15-minute chart, I believe the 30. On the 1 hour, it's a railroad. On the 15-minute chart, it did this. And this is why it's bearish. It shows buyers pushing the price higher at first, but then sellers stepped in and overwhelmed them. It represents strong selling entrance and rejection of the higher prices against the previous buying pressure. A bearish engulfing pattern is an uptrend that may signal a potential reversal. Same thing, but the opposite. This is for a buy. We got a red candle, then this green candle just came and just took it over. Engulfing candle. Shooting star. These happen at your high of the day. These are sell reversal candles. And usually, I'm not gonna lie, it seems like these candles form fast, where there was like a big push up, and then all of a sudden it just completely reversed and turned into a wick. And this was one big candle at first, one green candle. So what happens is the candle opens here, pushes up, it's green, and then it hits the high of the day, it bounces off of something, mayo, blueberry, water, whatever, and then it just reverses. Or even if there's nothing up there. The whole point of these candlestick patterns is to be able to recognize this without any indicators. Comes back down to the open of the candle and then goes lower than that, forms a small body and closes. So it has a small body, green or red, near the bottom of the candle. It has a long upper shadow and a little to lower shadow. A shooting star indicates that buyers push the price higher, but by the end of the day, sellers have regained control and pressure the price back down near the open. It represents rejection of higher prices and shows that sellers are stepping in. A shooting star may signal potential reversal lower, especially after an uptrend. I'm gonna keep it right here because this is all we need. This ain't gonna be perfect, but this is everything we need. And I'm gonna go over this on multiple time frames. So what is this? The last week of March, March 31st up until April 17th. Or at least do 2 weeks at a time or something. This is showing 3 weeks. So I'm gonna start, since I'm here on the 4 hour chart, we're gonna go over the 4 hour chart and I'll break it down to the 1 hour and the 15 minute. So the first W that I was going over earlier, and you'll be able to see how this looks on lower time frames too, piece it all together. This right here at the bottom, close to a doji, this is specifically called a spinning top. It looks like a spinning top if y'all old enough for that. That's what this candlestick looks like. And to me, this is a doji that's close enough to almost a railroad. This green and this red candle are almost the same size. The red is a little bit bigger, but when this did this and pushed up, this was almost a morning star for me. I would have looked at this as a morning star. The spinning top was good enough, and then that pushed back up. And if you wasn't sure when you waited, it eventually pushed up and confirmed the buy. So this right here stands out to me. We got 3 momentum candles, 3 vector candles. These that just pushed up, closed above the water, and then it continued to push up after that. We got a bearish engulfing candle here. So we got this green candle and then this engulfing candle that bounced off of the Mayo. So that right there, as soon as that closed, you could have entered here and took your sale. This did an engulfing candle down, and then we got a doji here. Once it did that doji, it stopped and went right back up. Now this ain't perfect, but that doji to me is almost a morning star. We got a doji here, and if I remove the wick, this green candle and this red candle are almost the same side, which is like a railroad with a perfect doji in the middle. So that right there showed me a buy, and which this buy was good to go as long as your stop loss was in the clear. Eventually, that would have went into profit. We have a railroad track right here. They don't have to be big. They're just the same size, back to back. And this is our second leg of our W. After that close, we could have got into the buy here. That pushed up right away. If you wasn't sure, you just wait for this to close above the water, and you could have entered there. So we got this big candle. When this closed, we got these candles pulling back inside. This is like our falling 3 method. When these were done, this candle here came and pushed up and closed above all of these candles. Once that candle closed, we could have entered right here. You'd have dealt with a little pullback to the mustard if you wanted, but based off that pattern alone, that would have been your entry, this red candle. It would have pulled back. You could have had your stop loss below this first candle that made it all happen, or this railroad, the bottom of the W, and it pushed up and gave the money out. I hope somebody see that besides me, because that right there is the falling 3 method. Somebody say hallelujah in the chat.
Hallelujah.
I see it.
Thank you, AC. That's what's up. We went up. Now we got, I don't know if anybody can, if y'all know what this is.
Railroad.
Railroad. So after it's closed, bam, entered. I'm actually measuring this before I move on so we can see how many pips that candle was. But right here, we don't know it until this candle closes. So we got to push up. I'm going to circle the whole thing. We got pullbacks that stay inside of this candle. Like we got a wick down here. They didn't close below this. So we got all these pullbacks that all they did was basically pull back to the mustard. Remember I said this is a pullback to the mustard pattern usually. It's a continuation pattern. So we got a push up, our pullbacks, and then another push up. Once this closes, we enter. So you done entered on this doji. You didn't know it was gonna be a doji, but as soon as this closed, that's where we entered at. Now it pulled back and it went as low as here. But we'll go over that in another video. When you learn where to put your stop losses, you would have recognized the V. You're going to be looking for the W and the V, and your stop loss always needs to be below those W's. If it's an M, it needs to be above the M and a little extra space for the spread. We got this W, and so this was the low part of it. This was the first leg. So your stop loss needs to be at least below this area, because this is the low right here. If y'all recognize this low, this whole little space. It's also the mustard right here. So you could have put it below the mustard. So when it's pulled back, it never would have came to that area if your stop loss was down here. This is the blueberry right here. This is the mayo, it's the water. If you don't have to go that far, don't, but you can always put it below the moving averages. If you're in a buy, you can put your stop loss below the water. But there's always more than one spot to put your stop loss, but the number one spot needs to be at least below the V's and the W's. You need to be able to recognize that. So when this was the lowest spot, that's the first spot your stop loss should go. If it didn't go any lower, it should have at least been right here, because this was the pullback. That was the pullback right there. Put it in there, and anywhere you entered would have been safe. Because if you took this as the pullback to the mustard and got in like on here or something, you would have went in a profit. And depending on how long, if you got out with that, cool. But if depending on how long you hold your trades, you would have went through up and down, and you eventually would have been paid out here. So after this, if you entered here, you would have got pulled back here, but still been safe because your stop loss is down here. So that was the falling three method. And that would have been the entry for that. We're going to move forward. Now we started to get reversals. We got wicks. We got these spinning tops, which are like dojis, anything like dojis. A lot of wicks, a lot of dojis, dragonfly doji. All kind of stuff going on here, a bunch of wicks. And then it came and did this big red candle. This is almost like a bearish engulfing, which with a spinning top before it. If we took off this wicks, this would be one small little candle, and then this candle came in. A sign right there to get into a sell. It did the sell here, but then it pulled back. Let's say it took you out your trade. Catch across the mustard back up in the opposite direction of the sell. Get out your trade. These are things you would look at. And depending on where your stop loss is, whether you would have held this trade or just reset and entered again. We got a railroad here. I'm sure everybody already seen that before I even said it at the top of the day. That's the real signal. As soon as that closed, we would have got into the open of this candle and caught that first shift down, and then down to the water. Water would have been a TP. So if you took that and you got into that sell, you're up here, which means your stop loss is above here. But your stop loss at the high, the top of the M or the A or the railroad track, whatever made it reverse, even though you didn't enter up here. You entered here, you need to put your stop loss out the way. It's not coming, you're not counting on it to come back up there. Because you see this big fat railroad after it did 1M and didn't give, and then did a buy off your scanner, but then after that did a railroad. You're like, okay, yeah, I'm getting into this sale. And then it shifted down fast. That definitely confirmed it. Hit the water. But when it pushed up, it didn't come back up here. So now we got to pull back to the mustard. We got our spinning tops, all of this stuff, bouncing, rejecting the mustard, wicks off the mustard. We keep getting these big candles to push down on the downside. We got a doji here. We're not fully confirmed until we're under the water. We got a bearish engulfing right here. Let me circle it. We got this green candle, then a big red candle right after. Bearish engulfing. It's under the water. It's bounced off the mustard. We enter there. We're in on this candle. We catch it down to the mayo. You can see off the mayo, we got, this is like a bullish engulfing. It's not really an engulfing. It's small candles, but it's almost like a railroad. We could take those buys off the mayo. Hit across the mustard up. That's a good sign. We up right here. We took this buy off the mayo. That's still good. And then after that, it formed this. Let me redo that. To me, that's an evening star. It don't look perfect, but what we got is if I took this middle candle away, these two candles would look like a railroad. So I see that with something similar to a doji in the middle, any form of a doji. The Candlestick Bible, the PDF is going to have a lot of them. This is almost similar to a spinning top. There's a lot of them. We went over the dragonfly, the gravestone, the regular doji. There's hammers, there's shooting stars, all of that kind of stuff, the reversal ones. Any variation of that in the middle of what looks like a railroad track to me is an evening or morning star. So you could have got in there and you could have caught the sale back down to the Mayo again. Y'all clear on that?
Yep.
Mm-hmm. Gonna switch to a 1 hour chart, which is my favorite time frame. This is what we was just looking at, the 4 hour chart and how it bounced up to the Mayo. And then this was one big W, and then that was our level one, and then it stayed in the same zone, and it finally broke out for a level two, and then it pushed up that last time and did that M, and then this part right here was a railroad on a 4 hour chart. Same thing, 1 hour chart. We're gonna look for the same patterns. So what I call this, something I call them shift candles. To me, those are the candles that make the catch up across the mustard. So we got this one, shift candle, bam. After that, catch up across the mustard. We got pullbacks. So we got a bullish engulfing candle. Bullish engulfing. After that happened, this is your W here. One big ugly W. I ain't mean to do that last part. There's a little one right there, which did the first shift. Could have entered there. Or there was one bigger W, which I tend to look for. And there was a bullish engulfing candle. Close of that candle, you could have entered here. We also got 3 vector candles. Bam, bam, bam. So at the end of that, that's an entry. It did a pullback. Then it continued to shoot its way right back up. This was a fake shooting star right here. Looked like it wanted to signal a sale. And after that, nothing happened. I want to explain this because people did this on Monday with gold and a few other things. There was a big gap. So people were looking to close that gap. You do not take sales like these unless you see an M. Then we got one big W right here. So until this shows a complete reversal, we don't need to sell pullbacks. We don't need to trade pullbacks. That's something that I took out of my trading almost completely in the last couple of years. I'd rather wait on the pullback and continue to buy than to trade a sell to the pullback and hoping that it's going to come take out this big fat W. If I can't see this coming and actually, you have to visualize it. If I don't see this selling and taking out this big W that they done set up, there's no way that this sale can just be doing that. I mean, for me, it would literally have to be bouncing out the blueberry, and that still don't mean it's going to do it. But that is a fake shooting star right there. It looked like it wanted to sell, but we're in a buy pattern. We're in the uptrend. So to show it with the moving averages, we got this big candle. After that, ketchup crossed the mustard. Shift candle. The ketchup was crossing down and it crossed right back up. Here goes shift candle. It's a bullish engulfing that happened back to back. If you wasn't sure because the water ain't in the right place, remember the first day is always the hardest. The water ain't where it's supposed to be. But the W was set. It closed above the water. You could have entered right here. This was a 3 vector candle that closed above the mayo. Could have entered there. Your stop loss should be, for me, the first spot for my stop loss is always going to be that shift candle. The candle that makes the ketchup and mustard cross. Ketchup mustard cross is usually a big candle. It's not always like that. But when you recognize them, your stop loss can usually go right below those candles. Because those are usually the second or first legs of the W anyway. And at worst, you could have put it below the whole overall W, which is down here. So your stop loss down here, you have no worries. Or you can go below the water. Below the water is usually a safe zone. It depends on when you measure it. We'll get into that whole another session. But I'm just explaining it as it goes. So shooting star, we're ignoring that. We got push-ups. And then what we got here. Anybody recognize what this is? Let me circle it. Evening star.
Evening star.
Mm-hmm. I think I heard an echo. No, it's just evening star. Another sell candle, sell pattern, and an uptrend. After it did that, this looked like railroads back to back. We can't fall for that stuff. We went over in the first session, the first lesson, with the WVVA or WVVM, the 3 levels. We're still looking for the next levels. When we see this W in that level 1 push up in the first pullback, we're looking for the level 2. Now, if you're in the buy and you notice this, you can get out. You can take a partial. Well, we're not ready to sell that just yet. We needed to push up one more time at least. Because we got one push here with a pullback, and we got another push up here. And it looked like a pullback. We need that final push. The third level is always the choppiest. All this up and down, all this choppiness, all these wicks. That's why I don't care to trade it. Unless you're already in the trade and you catch them, you want to go through all that emotion. You could do that. So it happens. I know I get through it. But you don't really want to enter on that. But it did a pullback to the mustard. And since there's no ketchup or mustard across, we got another momentum candle right here. Candle that pushed back out. And if you dare, you enter on that candle and take it to the blueberry. Now we at the blueberry. We got a railroad up in here. And then we got a bearish engulfing right after. I'm going to delete that because it's a little crazy. I'm going to zoom in on it, matter of fact. We're about to dive into that. This little part right here, because it didn't keep selling. Matter of fact, let me see if I can get that on there like that. Bam, this little zone. We're finna go over this. So we got a railroad. At the blueberry to get into a sale. And then we got the engulfing. We got this little green candle, and then this bearish red candle, bearish engulfing. So if we didn't enter off of the railroad on the blueberry and you wanted to wait, confirm, once it completely held the blueberry and shot back down and was under it again, after that bearish engulfing, we entering right there. And we in on this counter. Now this one finna get tricky. I like how this look. We got a bearish engulfing candle, and this is our falling three method. We got these candles to push up, but they held the mustard and they didn't break this candle. They kind of wicked. This one came up and was like, oh snap, but it wasn't engulfing like this candle here. So we basically got this downside here, pulled back still within that candle, and then we came and got another bearish engulfing right after that. This whole candle here. And at worst, you entering down there, under the water, enter here, and caught that down off the blueberry. That's what that would have looked like because I expect people to take that kind of trade. Now, the blueberry didn't hold like it should have. When you trade off a blueberry, if it's doing its job, you should be able to hold that trade 2-3 days. Easily. 2-3 session breaks. If you on a 4-hour chart and these gaps, this right here, the session breaks, you should be able to hold 2 or 3 of those. So if this is a week on MetaTrader, from here to here on a 4-hour chart is a week. So you hit that blueberry, it should be 2 to 3 weeks. 15-minute chart, 1-hour chart, 2 to 3 days. When the blueberry is really doing this job. Okay, these are railroads now. That's a bearish engulfing candle right there, which is still what I call the shift candle. It went up and it wicked off the mayo in the water. And then it came and crossed after and did the sell. So you'd have entered on this candle after that bearish engulfing. We got the bearish engulfing, you would have entered this right here, and it didn't do much down. This is how I would have did this in real time though. Stop loss, depending on where my stop loss at. Swing high right here, this is the next swing high. If I had it up here, I'd have went in a profit here. Or if you just entered again. Because this is another engulfing candle, big red candle. So after that closed, open to this candle, you would have entered, you would have dealt with a little pullback to the mustard and then caught it back down. You have to learn where it can go wrong to know what to do and to manage it. Everybody teaches how to win. I kind of like to teach how to lose, to be honest with you. I always say that. Learn how to lose, you'll learn how to win. So we look like we got an M right here with the blueberry on top. And then we got this bearish engulfing candle. And that would have looked like the ender. Now with the moving averages, we would have left this alone for real. But on a naked chart, because I'm always look to see what the candlesticks are doing first, that looked like that would have been a good sell. And it went into profit for a little bit. But when we start to notice the reversals, because this is a morning star right here, it's not good enough, but we got this doji right here. So we definitely got the doji. If this was a little bigger, that would be perfect. But we got the doji. So when we notice these kind of candles and we're in this sale, we're like, okay, this could be a reversal. The biggest key is that it's not breaking these lows, these previous lows that made that W. Still holding this W here. So when we notice, okay, it's doing that, it's like, okay, it might not come down here and it might not sell. So now I need to pay attention to my buys. If none of this made sense, this was the first sign right here. Bullish engulfing candle. A little red candle, then it just took off. Catch up across the mustard. We're back in the buy. And that candle took off. That's how we know we're back in the buy. Pull back to the mustard. If you want to trade it off the mustard, these are tweezer bottoms right here. They almost look like a railroad track with long wicks on the bottom. It came and pulled down, went back up, candle open here, it pulled down again, and then it pulled back up, and then it turned into a green candle. So those were the tweezer bottles. After the buy, we got a doji down here with something almost like a morning star. We got a bullish engulfing, which turned into the shift candle that made the ketchup cross the mustard. Next candle pushed up and said buy on this candle. So that means it said buy when this closed. So we got the bullish engulfing, ketchup crossing. It has to close for it to say buy. So we got here, pull back to the mustard, the water. That's a wick. All that's a wick. Turn it off. That's a wick on that red candle. So it means it pushed down to it and it basically held the water, the mayo, the mustard all at the same time. So when this said buy, you would have went straight into profit. When these things say buy, it's at the beginning, the open of the candle. So right away, it would have went straight up. Pull back to the mustard, tweezer bottoms, and we taking it up. We got another bullish engulfing candle right here, pushed up. That means the entry would have been here. If you're not sure because that blueberry in the way, you just wait. You either already in the trade and you just holding it, or you just wait, or you get out right here. But this bullish engulfing candle was another entry. So right there, consolidated with straight across, pull back the wick off the mustard again. Every time it hit that mustard is your real entry. That's your re-entry. Some people that enter off of that pullbacks to the mustard. You got to figure out what's your favorite entry. So after that, bam, which means that could have been another entry. It went into profit, but then we got a problem. Now it went into a railroad. And then they started to get choppy. So it's over with after that. If you weren't sure, you just don't trade. Yeah, this is getting real. This is getting interesting to me. Top of the day, we got a railroad track. We got to make sure we're still trading with the levels. So what you would do is if I notice this and I'm looking for buys, if I'm in the buy, I'm going to take profit. I'm going to take a partial, something, put my stop loss in profit. That's what you should be doing when you see these patterns if we're still looking for buys. We got a railroad here. It ain't perfect, but you could have took that and you would have went into profit and been back in the trade all over again. So we're going to look for the continuations. We got one here. It almost did like the falling three method. It didn't break this candle. There was just no shift candle out of there to confirm that. We didn't really get one until here. Then we got a bullish engulfing here that made the ketchup and mustard cross again. So let me zoom in on that. Because this is all consolidation. This choppy is ever. So we wait for that ketchup and mustard to cross. And remember, with the ketchup and mustard crossing, that is the last thing you need to see to get into your trade. So by the time you see that, you'll recognize all this stuff. This pattern right here. Or this is a bullish engulfing right here. And you keep noticing the wicks. So this is the low. This is where your stop loss would be. This is what set the tone. So every time you see the Candlestick Bible patterns and you get in, your stop loss is going to be below this one. So we got a bullish engulfing here. You could enter there and stayed in your trade. We got another bullish engulfing here. And after that, the buy went off. And you would have entered on this here and stayed in your trade. Catch this push up, pull back to the mustard, and more pushes up. This was 1, 2, 3 here. This was like a shooting star and a bearish engulfing. So we got another shift candle. This is almost like a railroad. It is a railroad. Or bullish engulfing. They're just smaller. In real time, when you see that, it's a bullish engulfing. This right here made the catch across the mustard. We back into the buy. Did a pullback. There's a gap. Y'all know about the gaps.
Tell us about the gaps.
Y'all funny. Take me through that. You should master trading with the trend. The only hard part about it is that y'all don't know when to look at the charts and not push a button just because you looked at the charts. That's the hardest part. Because if you recognize all this stuff we've been going over in the Candlestick Bible, it sells, but it's not trading with the trend. We only need to recognize the patterns that trade with the trend. So it's okay because these didn't give out nothing anyway. That's scalping. So trade where the water is at, trade in alignment with the water and master that. That's all you ever need to do. That means you might not take trade, you might trade once or twice a week because it just didn't align up, but you're not losing nothing because you're not trying to catch these reversals and trading against the trend. So that's the whole thing you got to keep in mind the whole time. Where's the water? Because I mainly trade TDI and I'm still looking at where's the water, what's the overall trend. I'm still trading with that trend. So we're here now. We got a bullish engulfing. We just went through this gap. So what happens is when there's a gap, it usually gets filled back in. So if there was a sell gap, they usually do a buy to come and fill that gap back up. That can happen the same day. It can happen next 2 days. It could take another week, depending on how big the gap was in the time frame. But 9 times out of 10, they're going to come fill that gap up. I would want to say 100% of the time. So when you see that gap, and we're trading with the trend looking for buys anyway, we're going to wait for that next buy to come fill that gap up. And that's exactly what it did. So we got a bullish engulfing here, make the catch up across the mustard, push up, you can't beat it. We got these 3 strong pushes right here, could have entered right there. It consolidated for a little bit, then it pushed right back up.
What exactly is happening with the gap?
It's a gap in price. So what's really happening is and I guess in technical terms, is that when the market closes, because this is a Friday, and that's when they usually happen, when the market closes. And let's say people are in buys. People get into these buys on a Friday and at the end of the week, and they don't have no space. I only hold trades over the weekend if I'm hundreds of pips up or something. I'll never be right here 20, 30 pips in profit and hold that. That's not worth it. On a consistent basis as a smart trader, that's not something I'm going to do every time that happens. So it did buy right here, and then you're hoping to catch that gap push up. That's lucky. That's gambling. That's rolling dice. It can happen, but that's not a strategy. That shouldn't be in your trading plan. That shouldn't be part of your arsenal. So what people do is they're doing that, and then they come and just stop them all out over the weekend, just to go up anyway. Because the only reason they probably stopped them out, for one, is just money there. But they were probably right. They were right. This thing gonna buy, but it went through this first. So you just wait on that since it was Friday. Now, if you down here or something, you got into the buy back then, Tuesday, and then you want to hold it. Yeah, I'll hold this entry right here, up in here, and let it keep going the next week. But I'm not gonna get in Friday right here when this looks like like an M almost, triple top, and then get into the buy. No, they came and stopped them out. And if you notice where this is at, this still didn't never break this after this little M, and it came and did this. This is pretty much a railroad. The green counter ain't as big as the red, but that right there set the tone. That was another safe zone. So if you got any buys and your stop loss was below that candle that did it, give it a little extra room for the spread, you'd have been safe right here. So even through all this, when they did that, this was still the safe zone. Took them people out and bam, went right back up for the next 3 days in the direction it was supposed to go. So watch out for them gaps and holding your trades on a Friday and you not a few days in. All right, so where was we? Got our three vector here after this buy. Could have entered here. So I'm gonna zoom in on this spot. We got morning stars up here. These are basically other places for entries. There's a morning star right here. They don't look all that good. We got dojis, but the real one was right here. Because it did do an evening star here. This is an evening star. If we was in the seller market, I would have took that. But we in buys. Look at these big momentum push candles. We looking for the buys only. So when they did this one here, complete morning star, or the got in on this doji here. Did the buy right here, stop below the morning star, put it below the mustard. Once it did that pullback to the mustard, I never broke this. It never came below the morning star. We good to go in profit. This one looked like a shooting star, but it ended up green. So we good to go. We're gonna keep buying. It wasn't red. That's a good sign. But yeah, we could have entered there and been in the buy up here. Now we got railroads here with tweezer bottoms. It's getting choppy. And then we came and got a bearish engulfing right here. That showed the end of the day, high of the week. Then we got some drop in. That's just a pullback. Back into consolidation, back into the buy. We got a bullish engulfing right here, close to the water, railroad track. The similar, more like a bullish engulfing. It got the wicks on it, but the candles are about the same size. This one's bigger, so that's another buy. That's a bullish engulfing. That shows the buy, and then the scanner went off afterwards, and you could have gotten to the buy and caught it up. Got a railroad track right here to show another buy. We got a falling 3 right here to show another buy. So we got the push up, 3 candles pulled back that didn't break the low, and then this one pushed back up. Show another buy. One last push off the mustard, and it was done. Pull back. We don't really want to mess with this Thursday, Friday. It's the end of the week. But this how this go. We got to me, this would count as a morning star right here. Let me circle this. Because it basically reformed another W again. One last time. This would look like a railroad track without this in the middle, and this is just another form of a doji. It's almost like a shooting star. I couldn't say exactly what that's called. As long as it look anything similar to a doji, some kind of cross spinning top, something in the middle, and you notice these two are pretty much railroad tracks, that's the buy right there. You get in on this candle. It pulled back and never came and broke the low of that morning star. So our stock was anywhere good below that pattern. Pushed up, had to make its little play. We got another something similar like a morning star. We got this red candle. I would call this an inverted hammer, some form of doji, an indecision reversal candle. All of these candles, you'll have to start recognizing these candles. They're going to be in the PDF. And then push up, that means I'm entering on this candle right here. Still did another little small pullback. We got a railroad track right here, bullish engulfing. We got all of these right here. Every time it came down, it did one of those patterns. Each one of these patterns was good to enter at, noticing the first one and putting your stop loss below it. So if you don't catch this when you see these, and then you can go back and say, okay, it did that. That's how you know where to put your stop. And then you enter in off of these, and finally it gave it out one last time. And I want to just measure this. 65 pips. With USD, you're doing 30 pips max unless you master that. So you can do 20 pips, 30 pips. If I had went through and measured all this stuff, everything would have been 20 to 30 pips. This is level 3, and the final run was 65 pips, just that alone. So we know we're getting 20 to 30 pips a day on all these other entries. This is probably one of the worst ones right here. Based off the engulfing down there, and that up to there was 40 pips. This right here, where the buy actually went off, and you notice that other stuff, and up to the peak. It did 25, 26. You would have got 20 out of that. But if you held it and your stop loss was in the right spot, eventually you would have caught these up to the 30 pips, 50 pips. So what I would give on that, I'm gonna get into detail on that on another lesson. You can go for 30 and you set alerts for 20. Use the trading view, you count your pips, set alert for 20 pips. 20 pips happen, you can go in there, take a partial, put a stop loss and profit, something like that, or get out completely. If you wanted to ride the 30 pips. And as you learn to manage it, you can start going for 50 pips, 60 pips, and so forth and so on. I'm gonna break this down one more time on the 15-minute chart. Same days. Yeah, I remember I went into that a little bit. I'm gonna do this too, because we did do this on the 4 hour for a little bit. When it started to reverse after that. And then we were taking a profit at the water, and then it was pulling back to the mustard on the 4 hour chart. And then it went into a sell. I want to show this because this is interesting. I like how this is all playing out. So right here, what is this right here? I'm gonna do like my homeboy say, anybody but a dead body.
That looks like a railroad
Is
and
a
a
railroad.
and
Yep.
a
Oh,
yeah.
and a what? What else you see?
And it looks like a morning star.
Nah, ain't no morning star show. Pillow fight show.
Is that a
A
bullish
morning
What did
engulfing
Doge?
next to it?
Dojis have to be in the middle of railroad tracks to be morning and evening stars. There's no doji in the middle of that.
But that doji, it's something about that doji that it seems like it's
That's just
important.
another sign, a doji, but it's not a
Yeah.
morning or evening star. So you got a railroad track and then a doji after.
All right. What does that doji
And then you
represent? It
got a
represents the
bullish engulfing.
change.
It went back to back on. Yeah, sign of reversal. Trend, trend train change. And then the biggest game was there was another gap. So we got this gap down. We got a railroad track off the Mayo. We got a spinning top doji. And then we got a bullish engulfing candle. It came and filled that gap right back up. You could have caught the railroad. The railroad off the Mayo was good enough for me. That means you would have entered here and you would have caught that. And then you could have got out at the mustard if you want, took a TP at the mustard, and then took a TP at the water. If that's what you want to do, if you catch that off the Mayo. And then we can even count those pips after that railroad. It went as high as 48. So to the mustard was like 26, and then the water was like 35. That's all you need. on Euro USD. That's all you need. Take that and you good. So we got that. I'm gonna do this until we get down to the blueberry to show how to trade off the blueberry again on the hour chart. I know I showed it that first time on the hour chart, but this is key. So we got a catch across in the mustard here. We got a bearish engulfing right here. And then a catch across the mustard. Once it got under the water, we was good to go. We got these momentum candles, these shift candles, whole bunch of consolidation. I see a railroad track right there. We don't know what to do. Bam, it wicked off the water. That means it hit the mustard. And this candle closed right here. When this candle closed, and we notice how it hit the water, ketchup was already across the mustard, is holding the mustard. And then we just keep seeing all these little, it's consolidating, but all these little railroad tracks back to back. This is the one that confirmed it. If the Mayo's too close and you don't want to trade it, just leave it alone. Came down here, did a railroad down here at the bottom, pushed back up, but now we're only looking for sales. You can catch this little stuff. Let me count the pips on that. The railroad closed, so that would have been the opening of the candle. I don't know why I didn't do that just then. But that's the opening of that. I don't know why I just did it again. This better be it. There we go. It went up to the water. Yeah, so it only did like 18 pips. And that's exactly what you want to look out for. We're looking for sales now. This done reversed. It was buying the week before. Now we're looking for sales, water on top. We're looking for the sales. So when you see this railroad and all this stuff, we're not chasing that. We're waiting for it to give out what we need on the sales side. So the whole point of the scanner thing is, okay, we got the water, we got the catch across the mustard going down for a sale. How do I confirm that this is a good sale? We start looking for the other stuff that happened before the catch across the mustard to confirm our trades. So this right here looks weird. It's like an evening star. We got these two candles right here that would have been railroad tracks if they were right next to each other. So we got this in the middle, which is like a hammer. It's a form of a doji. Got the long wicks, little small body. That's our first sign, evening star. Then we got this and this. So first we got this evening star thing going on here. And then we got this green candle and this big red candle. That's our bearish engulfing candle. So when we see those patterns, and then the scanner gave off the sale right after that, that's your latest possible entry. Y'all see that?
I see it.
I know you see it. You see it. So we have the bearish engulfing, and we already know the water was up there. The ketchup has crossed the mustard. We need to be able to recognize these candlesticks. That's a bearish engulfing candle. Held the water. If you ain't entering when it hit the water, and then it did this, and you're not entering. By the time that shift candle, bearish engulfing, ketchup crossing the mustard, all at the same time happened, that confirms this is a strong trade. We're already looking for sales. Bam, it gave it off. And if you still ain't sure after all that happened, or you just happen to miss that and you go look at your chart, as long as you caught it in time, we got another bearish engulfing candle right after. We had this big green candle push up and somebody got scared and all it was doing was bouncing off the mustard. And then it did a bearish engulfing right after that to enter here. When you're trading with the trend, the moves are going to be big. The only time you're going through pullback is if it's still doing the second leg of the M on this sale. All right, Miss Upchurch seen it. That means I don't need nobody else to see it. So you see that. So now we're gonna put our moving averages back on, and you see what it did. And we would have took it to the blueberry. That's our TP. We're gonna count the pips on this. That's 75 pips if you entered off the evening star. If you entered off the bullish engulfing, that was 60 pips. Go ahead with your question.
All right. So when you see that second engulfing one, would that kind of start the A?
Yeah, because it already did the M up here. And remember the M, the first one, usually the water's not in the right place. This can be considered an M, and then they extended it to hit stop losses and do it all over again. And if you didn't catch that, technically that was the first M, and then this was the second here. And so that would be the M, and this would be the first A. This is day two. So if we pay attention to the candlesticks, it's going to give us our entry. And I hope y'all already seeing what I'm about to show. We got a bullish engulfing right here off the mustard. Pull back to the mustard, bullish engulfing. Bam. That's an entry right there at the close of this candle. If we want to get in just based off of that. That means our stop loss is below the engulfing candle. So when we get pulled back to the mustard, we're safe. That's the entry. Bullish engulfing, enter. So these right here, this right here, anything below this is where we're in and out of profit. But if we look at it, all we're doing is pull back to the mustard. So we got to pull back here, pushed out, and we got to pull back here, and we have a morning star. We got our spinning top doji right here, bullish engulfing, morning star type of pattern all in one. So that means our entry is now here, right here on this candle. So we take our entry. We're knowing railroads. If we're in early, when you see stuff like this, railroads going the opposite direction, that's when you either get out or take a partial. But we're not selling these. We're not trying to get into sales. We're only going to trade with the trend with the water. So when we notice these patterns, we got another bullish engulfing right here that showed another entry for a buy. Which makes me also want to say, yeah, my boy just got off the call, but we used to crack that joke. Don't lose a trade over 2 pips. Don't lose a trade over 2 pips, because if you look at your phone and you up 18 pips and you see you took a buy right here and there's a high right here and now you're here and then you notice rejection, get out of it. Take it. Take your 18 pips. So that's key. So with my alerts too, it always goes off before it hits the actual TP. When I send in my trades and you see those lines going across in the numbers, my alerts are before it hits it. So in case anything happens, I'm watching it early. In case I need to take a partial, go ahead and take your money and run, whatever. Don't lose it over that. They put a big fat M in our face with the water on the bottom. What do? We got two choices. You want to trade M's? That honestly, that was bad. I don't want to trade the M. I want to stick with the buys because I've already looked at this on a 4-hour and a 1-hour chart. That's what we've been going over this whole time. That means I know we're looking for buys. I only dropped down to the 15 to look for an entry. We know that already. We already went through that part. So what do we got? Off the mayo, off the blueberry, I could take these, but I need to wait. We got a railroad right here, and then it catch across the mustard here. Now these probably would have went bad. That would have went bad. But I also want to point out that this is the end of the day. So we wouldn't have traded that anyway. What would have happened was we got consolidation, stop hunt low, W, pull back to the mustard, end of the day, reversal. That's the 5 phases. So we already went over that last week. So this is back into consolidation. We're not trading this anyway. So what do? We already caught our buy for this day. We're waiting for the next day. Well, what happens the next day? We get consolidation. We get stop hunt low. This is last week's lesson. We got our entry. We got a railroad right here. Catch across the mustard. Everything's not where it's supposed to be. We still know we're looking for buys because of the higher time frame. But what do? If we don't take that, we can wait. Now we know this right here is the safe space for the stop loss. So it closes above everything. Blueberry, mayo, water, and then it pulls back to it. Off the water, off the mayo, off the blueberry. I have said that when the water is in the wrong place and it gets in the right place and then it pulls back to it for that first time, this is all she wrote. So what do? Zoom in. We got some funny looking candles here today. So we got bearish engulfing right here. We got this little red candle and then a big push up off the mustard, water, mayo, blueberry all at the same time. So we getting in right there. This is the beginning of the trend. This is what I've been showing on all those other time frames. This is the beginning of the reset of the W. So I'm going to put a line right there because that should have been our latest entry. Why is that? I'm going to go over that again because we got W's before that. We got this W that's been set right here. And then we got these that kept getting set. The W's were getting set and they weren't coming lower than the W's. But the water wasn't right yet. So now we up here above everything. And now we finally got a break right here where the candles are above all the moving averages. And it just bounced off of it for the first time. This is where we need to count our 2 to 3 days. It bounced off the mayo blueberry. I said when it bounced off the blueberry, I'm looking for it to hold 2-3 session breaks. That means these blue lines, the beginning to end. So on a 15-minute chart, that's 2-3 days. I was saying earlier, your 1 hour chart, that's 2-3 days. On your 4 hour chart, that's 2-3 weeks. But on MetaTrader, these are weeks when you separate that. So here we go. We're going to look for the next 2-3 days. And we're going to look for every Candlestick Bible pattern every time we see a W or a V to find all our other entries. Pull back to the water. There's our railroad track right there. Catch across the mustard. We still, after that railroad track, we got a good push up. So if you had entered as soon as the railroad track closed, you would have caught that up, meaning your entries here. Stop loss below that W, below the water. You can go below the blueberry mayo since they close if you want to be extra safe. And you can let it go. Let the trade run. We got a railroad right here. After that one, pull back to the mustard. We got a morning star right here. Let me zoom in on these things. I'm finna dissect this. Morning star. Y'all see that morning star?
Yeah.
We got a railroad track, morning star, bullish engulfing. We're ignoring all the other stuff. We got a railroad track right here. We're ignoring that. We only looking for buys. We don't care about none of this. We got another bullish engulfing right here. Don't let them scare you out your trade with all these crazy candlesticks. We looking for what we know. Yeah, I'm gonna end it with that. This went long, but the beginning of it is definitely everything you would have needed. That 1 hour and that 4 hour.
Thank you so much.
Well, thank you. I learned a lot today.
That's what's up.
Yeah,
I think I
definitely thank
already.
you for your time, man.
Yeah, this went long. I didn't know the plan to go that long, but it's out there. We did it. Because these first two videos is gonna be the most important part. Because this is stuff you have to recognize with no indicators. You got to recognize the candlesticks. The candlesticks tell you everything you need to know. So if you can master these first two videos, the rest of it is easy because the rest of it is indicators and the ADR and high and the low of the day, other than showing where to put a stop loss. You figure that where to put a stop loss part out, then you good to go. Let me see. I think I stopped recording it. So I'm gonna go ahead and end this. Y'all enjoy the rest of y'all day, y'all week, and catch you next time.
All right, I'll hit
All
you
right,
up
you
in
have a great
Telegram.
day.
Hold on, one at a time. What'd you say?
Oh, I said I'll catch you. Hit you up in Telegram.
Okay.
All
And I
right.
said, have a great day. And everyone
Yeah, you
have a
too.
great day.
All
Thank
right,
you
y'all.
Thank
too.
you.
Have a
You're
great one,
welcome.
everybody.
Peace out.